Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Michael Ponte is the founder and the president of Prosperity Real Estate Investments. He's a real estate investor and an entrepreneur who specializes in the acquisition, renovation, and appreciation of numerous properties in Alberta. Since 2001, he's built the Prosperity brand into a diversified investment and management company. He currently owns over $10 million in cash flowing real estate assets, primarily in residential and multifamily properties. On this episode, we discussed exiting his New Brunswick deal due to rent control, his recent commercial multifamily acquisitions in Calgary, the coaching and consulting he offers, breaking down what he does every day, his thoughts on U.S. investing, and also interest rates going into 2024. So I hope you guys will enjoy the episode. Once again, just thank you for being the regular listeners, always tuning into the show and supporting us. It's greatly appreciated. As a token of appreciation, I just wanted to give you guys access to a free report, which is the multi-unit renovation operations order. And this is a document that I use when I go into a new property or a unit that's recently become vacant, or a property that we just purchased with a currently vacant unit. We write down certain things to get the process going. So I think it's going to be really helpful for you to kind of have a breakdown of in general what to do if you are planning on renovating a unit. So you can download that by going to www.welloff.ca/reports, and you're welcome to download it for free. So there you go. Enjoy the episode. Okay, I'm here with Michael Ponte, who actually Ponte. You just told me Ponte is the Portuguese way to say it. Yeah. But flying in from BC.
Flying from beautiful, sunny Vancouver to just yesterday. So yeah, pretty cool.
Totally different from our Toronto weather.
Little different. You guys have got some kind of ebbs and flows in your weather. I'm not sure what's going on. Sunny one day, snowing the other. It's bizarre, but it's all good. It's great to see. Great to be in Toronto. It's been a while since I've been here, so it's kind of neat. So.
Yeah, we've had some pretty good weather lately, but the mornings are still pretty chilly. I am a little jealous. I went to Vancouver for the first time last year in the summer.
Yeah.
I got to see Qualicum Beach, which was
beautiful out there.
Phenomenal place. Really, really nice. Downtown Vancouver, I didn't like so much, I got to say.
I could get that. I can get that.
Yeah.
The island is a special place for sure. And, actually right now, and it's just, the flowers are blooming right now. Grass is green and it's growing. So it's one of those places, just a beautiful area. If you ever guys, if for any of those that are going to Vancouver and want to check it out, that Vancouver Island place is just a wonderful location. So, yeah.
Yeah, even my parents, who are they're Lebanese, they're used to mountains and beaches and everything. And when they went to Qualicum Beach, I've never heard them provide a compliment to anything in Ontario, but they were like, "Oh man, this place is phenomenal, amazing." Yeah, so you're in here. You're in Toronto for a few days, is it, or just?
Yeah, I'm here for a few days. So I've got a bunch of things that I've got to be doing here. Just meeting up with clients. I'm very excited to announce. Well, this is probably the first time I'm announcing this, that we're going to be at the multifamily conference that's being held in May. So we have a few things that we're just organizing and prepping for that. Have a networking event as well with Elizabeth Kelly and Erwin Cito this evening. So I'm going to meet up some of my clients and students and just talking about real estate and all that wonderful stuff, and obviously seeing some family while I'm out here as well. So it's going to be kind of a little bit of a whirlwind tour. So it's just kind of great to be here after a few years of not coming out here. So
yeah. When you come over, you got to just pack your day, right?
Get it in. Yeah.
So the multifamily conference, are you speaking?
I'm not speaking. So we are just a booth sponsor. So Savvy Investor, which again we may or may not be talking about that, but that's part of our investor community. We will be holding a booth that's there and just kind of letting people know who we are, what we are, our group, and inviting them to be part of our Savvy Investor Facebook group. So yeah,
cool. Why don't we just dive right in? It's been 2 years, so we were kind of talking about this. 2 years since the last time you were on the podcast, and this time it's in person, which is always better for me. I find. Yeah. Back when you came on the podcast 2 years ago, you were talking about exploring New Brunswick as a market for multifamily. Tell us a bit about how your investments went in the past 2 years and what your thoughts are on the market.
Sure. really kind of like a whirlwind tour, almost like coming to Toronto, to be honest with you. It was kind of a short stint, to be honest. It was kind of cool. Really liked the New Brunswick market. It's definitely a little bit of a different place. So I think, and again, 2 years has been, it's funny to say it's been 2 years, my goodness. But yeah, we're buying our properties, and I think I might have shared one of our deals out there, and I'm happy to kind of share what the results were on that one. But, we bought a property. I'm trying to remember what the size was, if it was a 12 unit or 15 unit. I don't remember exactly. But yeah, I do remember that what we paid for it was like $950,000. And so we bought this property. We kind of have a long-term vision on it in regards to increasing valuations, doing some renovations and all that wonderful stuff, and CapEx, the whole thing, and refinance it, and then pulls a bunch of the equity out. And just during around that time, actually in Atlantic Canada, Halifax actually started putting in some rent controls out there. And again, I've been doing this a long, long time. And so, the spider senses were kind of tingling a little bit. I'm like, well, if they're rolling this out in Halifax, there's probably going to be a good chance that this is probably going to be rolled out in New Brunswick, because the market was just going bananas. Prices were going through the roof. Rents were going through the roof. So I was a little concerned about that. So, we kind of changed our strategy, changed our plan. And so what we did is we didn't do any of the renovations, but we increased all the rents across the board. And some of them were quite significant. So we were having, property units that were renting for $650 a month. We increased the rent to like $1,100 a month, not including utilities. That $650 rent was including utilities. So we raised all the rents within about a 4-month window. And within that 4-month window, we got them all up. We lost maybe about 3 or 4 tenants, just switched them over, and we listed the property. So we didn't actually do much with it, to be honest with you. And so within 6 months, we bought it, we raised the rents, and we sold it. So we bought it for $950,000 and flipped it for $1.515 million in a short period of time, right?
Amazing.
So, this is the beauty of multifamily. And this,
yeah.
George, this is one of the things, a lot of appeal with this is it's not so much dependent on what the market is. This is what you can really do some calculations on your numbers. And did we anticipate it to be to that level? No, we didn't. Like our budget at that time, we were looking at about 1.3, and we were budgeting over a 5-year time frame. We were going to go slow and progressive. But when we were concerned about some of the rent controls, which did come in, by the way, and we literally got out the month before. I'm very fortunate. It's not because I was a brilliant investor, just by coincidence, right? And so we got out in that market completely. And so with rent controls, we didn't like it. And so I'm an investor that does not like government controlling my income. And for those that are listening here as well, I'm sure you can appreciate that being in Ontario, right? So, so we got out, rent controls disappeared. So we're probably going to be jumping back in again, right? So it's one of those things that I like the market. I still like New Brunswick and some of the markets for sure. And I think for anybody that's listening right now, and I'm sure everybody can appreciate this, markets that are affordable are where the appeal is going to be, because as you know, interest rates have all gone up and people are needing to live and things are becoming a lot more costly, and people are most likely moving. They're looking for more affordable places. And, when you start to see the stats and for people are moving, New Brunswick is one of those places that people are moving to just because it's much more affordable. So, yeah.
Yeah. Well, you said you're not a brilliant person for selling at that time and, to kind of timing it perfectly, but really you did have like a brilliant idea or at least have the foresight of knowing that rent control is coming. So that was all you got it done and you were able to get out of there really quickly.
Yeah. It's kind of for me, like I said, I've been doing this a long time, and you should be trying to always see 3, 4, 5 steps ahead in everything we do. And that's maybe a little bit of advice is don't just live in the today, what's going to happen tomorrow. So like even right now, the today interest rates are really high. A year from now, 2 years from now, they're probably not going to be to the same levels as they are today. So what are you thinking? How are you strategizing yourself to that type of timeline? Paying close attention. Like government interference in our business has never been to this level in the 20 years that I've been doing this. You have to be paying attention to this. It's so important because as everybody knows, they can impact your business quite drastically, right?
For sure.
So, yeah.
Like when somebody says you don't have to pay rent, during the lockdown.
What a nightmare. I feel bad for you guys.
So yeah, that's a really amazing result. 950. How many units did you say that building was?
I think it was a 12 unit. It was a 12 unit building. 12
unit.
12
950.
950.
Yeah,
so
pretty cool.
Not bad prices, eh?
Yeah, it's still like, even though I understand that there's no rent control in other provinces, it's still kind of hard for me to picture that, because we go through so much here to be able to raise rents,
Totally.
to be able to turn over units. And when you're underwriting a deal on, let's say, a multifamily, you're always taking a chance that, maybe you're anticipating turning over a couple units in a few years, but there's always that chance that it might not happen, depending on the size of the deal. But if it's a smaller building,
Right.
it might not happen, right? So you're taking that risk, and it's a little bit scary. I wish we did have more freedom to do what you can do in New Brunswick or in Alberta or whatever else.
Yeah, it's true. It's one of those things. It's like, it's really unfortunate that the market just can't just be the market, just like capitalism, just the way it is. Really, it's just let it just do its thing. And because if government really understood this, and I'm not here to poo-poo on government, but I am going to do a little bit of it. But if you just let it do its thing and it made it profitable for investors to make this work, there'll be more land development. There'll be more properties being built. There'll be more rental units, and then there'll be more inventory. Guess what's going to do with prices? Prices will be a little bit more controlled. But once you tighten everything up, God forbid that vacancy happens. That rent's going to go up right now drastically, right? So
when you look at, because I know you invest in Alberta, right? Is it Edmonton?
Edmonton and Calgary, we do both
Calgary,
markets.
Yeah. When you look at the rents out there, do you find that most 2-bedroom units in a similar condition or 1-bedroom units in a similar condition are going for about the same across the board, or do you still see huge discrepancies? Like some people are paying $600 a month, some people are paying $2,400 a month.
No, not necessarily. They're reasonably close depending on the overall condition. Like if you're kind of mid-range apartment size, you can, and again, depending on area, depending on location, depending on the condition, but the variances are, maybe $100 to $200 variance roughly in that vicinity. We're not seeing like $500 to $700 variance,
which is what we see a lot of here.
For sure. Yeah. So you wouldn't see it to that same level, but the price points are not the same either, right? So that's the biggest difference. So I think it's kind of economy of scale. It's just like, you're paying a premium here, and Vancouver, the same thing. So the rents, you can have bigger swings, where in markets that are maybe at that high level where they're higher income, you wouldn't see it to that level. And at the same time, look at how much inventory is in the marketplace too. And that's probably some of the biggest differences is when you start to look at the inventory and the rental demand to inventory, that's where the comparisons are. So right now if I look in Edmonton, I think we're looking at around just 5 or 6% vacancy. Okay.
Yeah.
So that's what it is. Here, you're under like 1%. It's and probably even going down because the demand for rentals are just so bloody high. And so with that being said, there's just so much more demand, so you can get bigger spreads, right? So
although the vacancy rate might be low, people like me, which there are a lot of investors that kind of follow through with the same steps that I do. We screen tenants so much,
for sure,
that although, like I said, vacancy's low, for us it might be a little bit higher because it takes us longer sometimes to find that right person.
Agreed.
Right?
Yeah.
So it's kind of an interesting stat. I don't know how accurate it is, just based on if you're picking the wrong person, you're going to lose a ton of money just trying to get them out, right?
100%. 100%. Well, especially for you guys, it's just like once you get them in, it's extremely difficult to get them out, and with rents going up and everything, it's a big challenge, right? So again, when you're starting to look at some of the different markets, there are different rental controls, rental policies, literally province to province to province to province. So what you see here is not necessarily a similar correlation to somewhere else. So you can't paintbrush it with the same brush by any means, right? But I agree with you 100%. So
yeah. Let's talk a bit about what you're focusing on now.
Yeah, sure.
Are you still? I know you've got a portfolio of smaller properties that you've owned for a long time, and then I think around 10 years ago or so, or maybe 12 years now, you started getting into larger buildings. Are you still expanding your portfolio? Or tell us a bit about what you're.
Yeah. So right now, I actually just it was like a couple of days ago, we just got another 22 unit building just outside of Calgary under contract. So we just got that landed. Sorry, I shouldn't say landed, but we just got it under contract. So we're just going through the process of due diligence right now. We are actually streamlining a few of our residential properties. It's just it's the time. And even one of our multifamily properties that we've owned for a very long time, 11 years. And it's just taking a little bit of money off the table, to be honest with you. It's kind of having a little bit of foresight, like we just talked about this. It's like, I got this multifamily unit. It's a 17-unit apartment building we've owned for a long time. Cash flows like a bloody pig, which is great. We've done very, very well with it. But what we've looked at is we've got a mortgage on this thing that's assumable at a 2.25% still, and it's fixed for another 3 more years on this property, CMHC insured. And it's just yet another carrot that we can provide to a potential buyer that want to take advantage of it. And yeah, there is room for CapEx on it. So we're looking at it as like, let's take some of the money off the table. And kind of one of the things that I'm doing is getting into lots of cash right now, as much cash as I can possibly can. And so I do believe there's going to be opportunities for 2023 and 2024. And so we want to be in a very strong cash position at this stage to get into some significant acquisition mode. So selling one of our assets right now to repurpose a lot of that cash, reinvest it into maybe 1, 2, 3 buildings in some cases. Just makes sense. So that's kind of what we're kind of exploring. So we're kind of doing a little bit of dabbling between both of them. In addition, like that's kind of the acquisition side. So we are still scaling and not scaling, because I've been doing this for a long time, right? So I've got this portfolio here that we've been working through for a very long time. And trying to repurpose some of that cash to kind of to really put it back into the right types of properties and that we can focus on. So
what makes you want to sell that 17 unit that's cash flowing and all that?
It's just really, we see this equity that's just kind of sitting there, that's just available. And so for us, we want to just tap into the full allotment of it. And at the same time, even for our investors, I've got a couple investors that they're getting up in their age and they're looking to exit as well. But for the majority of them, they're just kind of repurposing a lot of that cash and putting it back into, instead of just one asset, 2 or 3 assets, right? So this asset is produced. We've done everything we possibly can to make it a good solid property. But if we can take that same capital and find other projects that we can CapEx, then it's just adding more returns on investment on not only their initial investment, but also the profits that they've made on their as well.
Yeah. Well, when it comes to this CMHC insured mortgage that you have, let's say you signed a 5-year term and you decide to sell it, let's say you decide to sell it after 2 years. Are you kind of aware of what the penalties might be? And also, is there any opportunity to refinance that property within that 5-year period, or are you going to face like some huge penalties or something like that?
If I go to refinance it, so I wouldn't be refinancing it so it wouldn't be myself, it would be the individuals that'd be buying it. So they would be assuming that mortgage.
I was saying like in a situation if you were keeping the building.
Oh, if I was keeping the building, there would be some costs associated with that for sure.
Do you have any idea of like what they would be?
I couldn't tell you all right off the top of my head. I'd have to talk to our mortgage broker to do some of the calculations on that stuff, but it would probably be pretty high, right? And just like anything, it's just got to make sense. So with the MLI Select program that's available now, that wasn't what it was when we got this mortgage, because it wasn't available. But there's other opportunities there that can be taken advantage of that you can further utilize. So for us, we just see this as, we've done very well with this property. It's got a lot of cash. Yes, if somebody wanted to refinance it, there will be a penalty associated with it that they'll have to capitalize on. But in addition, they can roll that into an MLI Select program, which can pay even more dividends out for them in the long term. So,
sure.
Yeah.
Now, again, if we elaborate on this, you're selling the 17 unit. It's got a mortgage on it that can be transferred to the new purchaser.
Yep.
I don't know what the numbers are on this, but let's just say I make them up. Let's say this is a $1 million building.
Sure.
And there's a $400,000 mortgage on it. I know the numbers are going to be higher, but there's that spread. What's the buyer going to do with that remaining amount? If they want to get to like 80% loan to value, or I don't know, 75% loan to value, how would they do that? Would they have to get a private second or something like that to fill the gap?
They would have to fill the gap. Yeah. So there'd be either private money that they've already got initially, some additional capital that they'd have to invest, private lending, additional, whatever the case may be. But they would know that there would be a large percentage of that at that very low interest rate, and then the balance would be at a more higher rate. So that's what they would have to look.
So I guess the buyer would have to see, does it make sense for me to go down this path or just get a new mortgage? Right? For sure.
But there is a huge benefit to this. I'd be very surprised. Like even on the private lending side, you're getting 2.25%. It's cheap money compared to what you're going to be getting out there right now. So
I guess they can also ask you for a VTB in second position,
100%.
right? And that, I don't know if you guys would consider that, but
Absolutely,
if you're just trying to get your money out, then yeah.
If we went to do something like in a year from now, a short-term program, I have no issues with that. So I think that's something we'd be open to exploring as well, right? Mm-hmm. So obviously we'd work with our partners, but at the end of the day, the goal is to get into cash, right? If we don't have an opportunity at the moment, but we've sold it, and this guy wants this guy or girl wants a short-term or VTB, a 6 month or a year. Yeah, we'd be open to looking at that for sure.
Cool. Yeah, that's kind of a similar situation that I'm exploring, cool. Where I want to see if I can take on the mortgage, because they did sign up for it a couple years ago, so the rate was really good. So it's kind of good. I'm kind of just being a little bit selfish here and picking your brain.
Be selfish. Like I said, I think for a lot of people, and for those that are jumping in right now, it's like in the multifamily space, there's a lot of people exactly like myself, owners that have got these really great mortgage rates. I've got another mortgage. I'm not selling this property, but it's like 1.87% for another 3 more years. This is a solid building that it's one of those lifetime buildings. It's just kind of like legacy buildings, right? And it's just, I'm not going to ever sell this one because it's just a cash flowing pig. That's kind of my pension fund right there, right? Mm-hmm. And so, but this one here, like I said, this is an opportunity that we've really capitalized on. It just makes a lot of sense. But there's a lot of us that have got these types of mortgages that can be very, very appealing for somebody that's looking to buy it. Do never be afraid to ask for a VTB, especially like from somebody like myself. We'd be happy to probably explore it. Probably won't be 4 or 5 years, but a year, 2 years, there might be some opportunity here. And part of it is we're here as investors. We're willing to work with other investors to kind of facilitate that, I guess, based on what their goals are, right? So.
Sure. Yeah, that's the cool thing about when you get into multifamily. It's a different kind of mindset. like a tight knit sort of community, because it's kind of an exclusive group, right? Not just anyone is buying buildings. So
yeah, and I think a big thing too, it's just like in the multifamily space, it's like you are dealing with investors, right? So they have that mindset. VTBs can be a struggle when it comes to single family homes, because owners just may or may not get that, right? But in the multifamily space, it's a common discussion. So just
in case anyone's listening and they're a little bit lost right now because they don't know what a VTB is, I don't know if that's the case, but just in case. So it's a vendor take back mortgage, meaning that the seller is providing a mortgage against the property and you're not going to the bank or going to some other institution to borrow funds.
Correct. That's it.
Yeah. What's your goal here? You've got this big portfolio. You've got cash flow coming in from your properties. What are you looking to accomplish? Are you just trying to build as big of a portfolio as possible, or do you have a certain number in mind that you're trying to reach?
Not really.
You have to share the exact.
Yeah, there isn't a number. Like I don't look at it as a number versus just quality of properties. Like I know for us, definitely in the next 3 to 4 years, we'll be probably selling a lot of our single family homes, and so there'll be kind of a transition period of selling some of the smaller assets, and then really putting a lot more attention on the assets that are producing, right? And so, been doing this a long time, and stuff that I purchased maybe earlier on in my career, if I look at where I am today, knowing what I know, probably wouldn't have bought some of them. It's not that they didn't perform. It's just that I think I could have probably used that money for maybe better assets that performed a lot better. So in a lot of ways, it's not about having more doors. It's going to sound kind of strange, as it is kind of finding quality doors, if that makes more sense, right? So it's kind of having a good portfolio that is going to be kind of reasonably easy to manage, and really become more of my focus for myself is being as passive in my business as I possibly can. So part of that is delegation, making sure the team's performing well, making sure that the assets are performing well. But the best part about this game and real estate investing is kind of addicting. It's like Monopoly. It really is. It's just like, it's not that you need to have 1,000 properties. It's still fun, the negotiations, the securing that property and being able to CapEx it and make some good returns and all that stuff. And even for myself, and I'm kind of at this stage, my kids are older now. And so for them, teaching them and letting them be part of this journey as well, and getting a chance to see what they can do, how they can do the same thing in return. So like I said, I don't think I will ever stop buying and selling. I just don't see it. I just really love the game. And so for me, it's just probably maybe streamlining things a little bit more, and maybe cleaning up a few things that I maybe will not be managing in the future. Right. So yeah.
You don't have a garden at home?
I'm not a gardener guy. It's just not my thing.
Italians and Portuguese, they love to have their garden, tomatoes and all that.
That's my dad. He loves that stuff. I'll go to his house if I want to just kind of fantasize about that. So yeah.
Yeah, I don't think I'm a gardening type either.
Nah, I don't like that.
Tell me about your day. What does a day in the life of Michael look like?
Oh boy, I don't know. It's busy. It's a really busy day, and I think that's, as we kind of talk about systemization, that's a constant thing, and that's for any business. It's constantly like evolving and adjusting. But I think for myself, well, if I want to get to the nitty gritty, I think part of it is balance. That's the biggest thing that I continue to focus on, and as my business continues to grow, you're always challenged with this, but you have to kind of push back a little bit, because we want to grow, we want to do these things, but we got to remember why we did this in the first place. So it's a battle even still for myself. Is we've got our real estate investing business, we've got our education business, we got our a lot of social media. As this is a lot of work that you're doing, even running your podcast and stuff like that. So we're jumping into lots of different ventures and different little programs and stuff like that. So for me, the balance is trying to stay fit, obviously. So go to the gym, work out in the morning, making sure that I'm spending my time with my family, my wife and my kids. Like I said, my kids are getting older now. So my daughter just went to university just this last semester. Like, she actually moved out of the house. That was a different kind of concept. So now we're like, oh, this is what empty nesting is kind of looking like a little bit, right? And then from that point forward, it's just kind of barreling down and just staying focused on work. And so part of it can range from lots of different things in regards to managing social media, having regular meetings with our team. So for example, our property management teams, we have meetings with them once a week, and just kind of touching base, just a touch point, see how things are kind of progressing along, be it vacancies, renovations, issues, anything. Sometimes the meetings last about the equivalent of 3 minutes. Everything's fine, perfect. Sometimes it's like an hour and a half, and then we'd work with our marketing team, and then our marketing team is really, what do we got planned for this coming month in regards to promotions and social media, events and different types of activities that we've got planned. And then from that point forward, I try to kind of cut things off at around 3:00 if I possibly can. And again, it's kind of living that kind of balanced life and just making sure that I am there for my family. And I got into this to have more time. And don't get me wrong, it's not always 3:00 because, I do a lot of training and coaching and stuff like that as well. So there's a lot of late nights as well. But in a day in a life, it's trying to maintain that life balance, and it's not always kind of easy, but a lot of emails, lots and lots of Zoom meetings. But I think in this world, one of the things that COVID has done is we've become much more accepting of the virtual meeting side, and by that, I've met some amazing people and amazing opportunities, amazing things. And so, the world is literally in your back door. And it's just really kind of opened up so many different variations to it. So, yeah.
Do you dedicate any time yourself to new acquisitions, or do you have a team that does that for you?
No, I don't. So I don't have a team of that, but I have a team of bringing me deals constantly. So there's always deal flow. And with that being said, the way I work with my team is they already know what I'm looking for. So they're the ones that are actually, screening it in advance. They have, we have specific expectations of what we're trying to accomplish there. So number one, most important is it has to cash flow. It has to. Yeah. And there's a reason why, is because look at what's going on today. You can survive a lot of major issues as long as the property is cash flowing. So it has to start off with cash flow. We're looking for opportunities. So we're looking for those CapEx opportunities and possibly motivated sellers if they're out there as well. So we're very, very, very picky. So as our realtor team is actually screening a lot of this stuff in advance, they use our analyzer, prepping it all in advance. Once they've kind of passed a few of the key tests, those then get sent to myself, and then I will go and do my own due diligence on that. And then from that point forward, we'll start presenting offers for sure. So, but deal flow is constantly coming in, but the acceptance rates is very, very small. Yeah.
Which is normal, right?
Yeah.
So some people, I mean, it depends on the market, but they will get into a building sometimes that won't cash flow off the bat, and they have a plan in place to make it cash flow.
Yep.
But you're saying all your deals always cash flow right off the go?
Not always. I would say we're looking for that. But the goal isn't to be cash flow, like just breaking even. That's not what I'm saying. As I'm saying, we may be in a position where we're maybe dealing with the negative cash flow to begin with, but whatever that upside is based on current rent, not future projected rent or any, it's what it is today. That's what I'm looking for in determining that there's an actual upside with this. And so for us, we try to negotiate to the best of our abilities to get to at least a break even or a cash flow part. But if we're seeing significant cash flow with not a lot of opportunity for cap, we're just not going to touch it. It just doesn't make any sense whatsoever, because it's one of the things that I tend to see. People get very emotional in this game in real estate investing, especially multifamily, and they're just like, look at this 18-unit building. I'm very excited to buy my first building. And then they just, all of their common sense just kind of goes out the window. It's just, they get all very emotional. It's like, I'm going to buy this building. But then it just doesn't make sense, right? So you have to kind of keep those numbers front and center. And if you can't get it to the price that you're looking for from the seller, you just don't do it. It's that simple. And I always use a term that that has played well for me is sometimes you need to let that property marinate for a while. That means it just needs to sit on the market, because sometimes these sellers will come back to you and say, would you be willing to accept the price that you gave? And then you can start your negotiation again from there, right?
Sure.
So
yeah. I mean, it's always different markets. They have kind of different rules around underwriting and whatnot. When you are looking at some of these buildings that are not cash flow positive off the start, what's your target for once the end of the cycle? Let's say you get like a 3-year VTB or short-term financing of some sort. What DCR are you looking for to exit with? Probably just enough to get a CMHC underwritten mortgage. That
would be pretty correct. That's about it. Yeah. So that's kind of what we're looking at, is trying to get that CMHC mortgage to qualify for that. Yes.
Which would be generally what, like 1.2?
Yep.
Yes. Yeah. 1.2. Okay. And aside from price, because you said, if you're not able to negotiate, sometimes you got to let it marinate, whatnot. What other terms are you looking for that can make a deal work? Maybe some creative ways that you can make a deal work aside from adjusting the price. Yeah,
like I think part of it is, if the seller's willing to accommodate some of the renovations or repairs or something like that. Like we had a situation where a property needed a roof. Okay, it was like going to be $70,000. And so instead of negotiating that part, they weren't willing to bend on the price side of things. So we started to help kind of accommodate some of the things that needed to get done, and we negotiated that. And guess what? They paid for the whole thing. So it was like there's some things that you can actually do. So it's reducing some of your capital investment that you actually need to put into place, where it can be very appealing to a potential future seller as well. And then also the banks are going to be very appealing to that, because they're not going to hold back that capital expense, which was going to impact your mortgage. Because as you know, once they do the repairs and they said that the roof is needing to be replaced in the next 2 years, they're just going to hold that back for that purpose of the renovation. So your investment, your actual mortgage amount is going to be reduced, right? Yeah. So that can be an issue. That's capital outlay that you're going to have to put in that you may or may not budgeted for. So this is where you can start to negotiate some of those other aspects as well.
Seems weird to me that someone's not willing to adjust their price, but they're willing to put a new roof on the place.
You'll be surprised with some of the things that tend to kind of come up. And there might be some other aspects of it for renovations that tend to kind of come into place. So maybe there's some things that can be actually done, that they're willing to, sometimes they'll say, well, part of our negotiations is, hey, you know what? This property is going to need about $25,000 per suite to get renovated, and they say, well, I could probably do it for less because I'm a contractor. I can do it for this price. Okay, great. Why don't we do this? Why don't you do the work? You can get it for a cheaper price. Then the units are completely renovated based on our approval for our condition, approval of what they're going to do. But sometimes that can work out. So they feel like they're actually saving, but at the end of the day, they're the ones that are actually putting a lot of the work. So when you take it over, it's just like, it's turnkey, right? So.
Yeah, I find that there's a lot of ways to make it work when you have a larger building, more units.
For sure.
Yeah, it's a lot easier than like just buying a single family home.
Yeah, for sure. Yeah. And like I said, people are thinking differently, right? As sellers and buyers, we're trying to be creative. We want to make it kind of be a win-win scenario for everybody, right? So, yeah.
You obviously have explored multiple markets in Canada, multiple provinces.
Yeah.
What about the U.S.?
Slowly looking at that, to be honest with you. There's a few things that kind of makes me a little bit nervous. It's not that there's no opportunities there. For sure there's opportunities. Obviously we got to take the exchange as one big one that we have to obviously take into consideration. So with the exchange, that can fluctuate at any point in time, and that can create some headaches for this. The other part is just the environment of the height of litigation. Like there's so much lawsuits and stuff like that. So you got to be extra diligent that comes along with it. But there are opportunities down there for sure. It's not to say we are not exploring it. We are. It's just kind of determining whereabouts we're going to be spending our time. So I would say we're probably in its very at its very beginnings. To be really honest, we're being Portuguese, and we were out there last summer. That's opened my eyes to that market more than actually the U.S., to be very frank, because when you start to run some of the numbers out there, and I'm just very fortunate, to have that dual citizenship as well. So it gives me some extra flexibility to do that. So it's part of kind of our long-term strategy where, you see a lot of people snowbirding here and down to Florida and then Vancouver down to Arizona, that our kind of vision is that we'll be snowbirding out that way. And so tapping into that market and learning that market a little bit different, because once you start crunching some of the numbers, which obviously when you're on holidays, you kind of play around with, you're like, I kind of really like these numbers. I'm not telling everybody to go jump and buy in Portugal, just to be very clear, but it's just a different market completely that we're exploring. So
would these be vacation rentals that you'd be looking at?
We'd probably start off with maybe one or two vacation rentals, but it would be kind of getting back to the apartment building side again, no different than what we're looking here. So,
okay.
Yeah.
When you're exploring a new market, even in Canada or Portugal or US, are you using a lot of data to select these markets, or is it based on something else?
100% the data, for sure. Like, for one of the biggest things is obviously there's two things. Well, the biggest one more than anything right now, and it's been a stat that was so undervalued of importance in the past, but it's very important today, is affordability. That is actually one of the most important ones that I think people need to really be paying attention to. And the reason for that is where we're at today. People are struggling. There is a lot of debt load in our economy right now. A lot of people are just, and so with that happening, with grocery bills and mortgage payments going up, everything's going up, people still need a place to live. But if they can't afford where they're living, they have to go somewhere else. And so when they start to look, where can I afford more? Where's a place that I can maybe move to that maybe my mortgage isn't so high? Those are kind of the markets you need to be paying attention to. And so with that and affordability, then you start to look for trends like migration trends. So where are people moving to? And that could be immigration and also migration. So you want to be paying very close attention to that. So even with immigration as well, we're seeing people maybe moving to different markets. Like and stats just came out recently here that Alberta was the number one migration for all provinces. And the biggest amount of population changes were actually from Ontario and BC moving there. Right. Yeah. And again, it's really back to affordability. If somebody can't afford a condo, I don't know what's a townhouse going for here in Toronto. What would you say?
In Toronto, I don't know, probably 1.1, 1.2. I'm just guessing. I'm not 100% sure. But yeah.
So you take a guess like that, and we're not holding you to it, George, right? But
I don't really sell in Toronto.
But you take that into consideration where, say, for example, you move to Edmonton, you can actually buy a 3-bedroom, 1.5 bath townhouse with a finished basement for under $200,000.
Yeah.
So all that equity that they may have in their existing home, they may have it completely paid off in a place like Edmonton. So they're just like, hey, it's reasonable. But I think the biggest difference right now is the acceptance of people not necessarily need to work at a location anymore. People can work virtually now. There's a lot of companies that are obviously accepting that. So if you don't actually have to live downtown Toronto or down Vancouver, and you can live outside where it's more affordable, or a different province that's more affordable, then it gives them a little bit of a better lifestyle. So I think, those are couple key indicators for me that are extremely important. And it's not to discount one of the other major important ones is obviously jobs. Jobs still need to be the main driver out there. So where's a lot of that job creation occurring? Vancouver's always been known for kind of construction. I think Toronto's the same thing too. You guys have a lot of condos and stuff. So a lot of development, a lot of construction, a lot of condos, all of those types of things. So it's really been always focused on the real estate side of things. And it's not, Toronto's still a very diverse economy, don't get me wrong, but it's just where are those jobs going to be created, and focusing on where those jobs are being created. You're seeing those migration trends. So then based on those types of patterns, then more population tends to grow there, which means rentals are going up and also home prices are going up. But a lot of it is the preliminary stuff is the data. It's some of the big things that I want to pay attention to is when I take it from a macro perspective, province by province, then I take it down to the micro, which province, and then start to break it down, which cities are producing the best results. So
sure. I think what you're saying about people moving to Alberta or whatever, some of these cheaper markets, I think a lot of times it's the immigrants, right?
Because they're not necessarily. No, it's actually in migration. It's actually, you'll see immigration and in migration. So within provinces itself. So you'll see both.
Yeah. It makes sense for some people. Like you said, it's way cheaper to buy out there than it is to live in the city.
Yeah.
Although if you do go out 45 minutes to an hour out of the city, you are getting much more affordable
100%,
housing.
100%.
So I don't know. I guess people just decide, like, do I want to stay in the area, live maybe in a crime, sort of like a place where there's more crime and more of that, or do I just want to move out to somewhere out west and live in a good neighborhood but much more affordable?
Yeah, like I can't comment on the crime in that end, but sometimes markets outside, and when you say that, it's like, I think it's much more accepting here, but like, are they willing to travel 2 hours to get to work, and so they're really going on the outskirts a little bit further. But like, to your point, it's more affordable there. So your point is very valid. It's not that you have to go, when you're looking at markets, it doesn't mean you have to look at like places like Edmonton because everybody's moving there, but maybe in the further outskirts of within the cities that you were focusing on, it may be better value, and you may be seeing migration trends moving outside because it's more affordable.
Sure. Yeah. Aside from that, we touched on a little bit of how you've been able to kind of, with your experience, predict certain things that might be happening, and you touched a little bit on interest rates, and you think that they might be coming down over the next 2 years or so. Just give us your thoughts on the interest rates, and just any other thing you think investors should be aware of moving into the next few years.
Yeah, I think for interest rates, my 2 cents is this: I still think we're not done. I hate to say this, sorry to disappoint people. And again, I'm just using Mike Ponte's crystal ball and take it for what it actually is, because I don't think a lot of people actually know what's going to happen, including a lot of economists. But truthfully, my 2 cents is we see what the Fed's doing down in the States, and we are still very closely tied with that. And you see what's going on in Europe and stuff too. I still think we've got at least another quarter to at least another half point somewhere in that vicinity of going up. I'd be surprised if the Bank of Canada does not go a quarter point this next go around, just to maintain it. Inflation's still reasonably high. I know there's still a lot of challenges in the market, but they still need to temper that down. My guess, and I am playing kind of worst case scenario, it's just the way I roll. It's just like I always try to prepare for the worst case, and I probably say there's probably another quarter point. Again, maybe it's going to be in July or August, somewhere in that vicinity. So I'm planning in my own business roughly a 0.5 percentage point. So even within my own business right now, it's not that I'm not dealing with challenges. Everybody's dealing with those same things, but we have to be, head down and start buckling in and start doing the things that we need to do, right? For us in the markets that I'm in, I'm raising rents somewhere in the area of 12, 18%, 20%. And that's what I have to do to kind of manage some of the challenges that are here.
Lucky you.
Well, I know, really. But even with the turnovers, whatever we can do to kind of raise some of those rents, that's kind of one of the main focus. In addition, trying to take advantage of some of the programs that are available. I don't know if a lot of people are aware of this, but there might be some exceptions to the rule in regards to extending amortizations to your mortgages. So talk to your banks, and you have that ability to kind of get some flexibility there. Some of the banks do like skip a payment or all those. So it's taking advantage of all those things to kind of ride out the short term, and so for me, I am saying 2 years, because again, playing worst case scenario, I'm planning as this is an issue. I anticipate probably rates starting to come down in 2024. But I want to be clear, this is probably not going to be the same level as what we once were used to. Probably won't. So it's kind of understanding that we're probably not going to get that 2%, 1%, 3% rate. It's probably going to be hovering around that 4.5% range at some point in time, but we're just not there yet. And so I think for a lot of people that are, two things. Number one, for people that are in the market right now and are struggling, I'm sorry, it's one of those challenging times, and for a lot of people, George and I were kind of talking beforehand, this is a cycle. Real estate is an investing cycle, and this is the bottom of the cycle that markets like Toronto and even Vancouver, they haven't seen in decades. And so this is now that time. And so as much as I hate, you don't want to hear this will make you better investors. And I know this is a challenging time. And for those that are in this, the important part is don't bury your head in the sand. Like, you got to be active. You got to get in front of this stuff. Look at some of your options and programs and things that you can work on with mortgage brokers and property managers, and just get involved. And you're not alone. Connect with other people to kind of help facilitate, connect with other people to learn what they're doing to help manage their business. And there may be some ideas that you can integrate into your business to kind of bide some time and manage through this challenging issue. And I think for people that are getting in the market, you shouldn't be afraid of what this is. I do believe there's going to be opportunities. And, I look at myself, my legacy time period was actually 2009, is right after the 2008 recession. Am I treating it the same way as what happened back then? Maybe a little bit, right? And so for me, I'm kind of getting into a lot of cash, because I'm hoping there's going to be a lot of opportunities for this coming year. So I'll be very honest, I'm kind of excited in some cases that there might be some good deals that I can take advantage of. And so for those that are listening, don't just listen to what's going on in the media. Pay attention. There are deals out there. There are opportunities. It may not be in your own backyard. That may not be facilitating that. So explore, get out there, make lots of connections, engage. I'm sure, I've shared a few things today. It's just like, be open, and there are deals to be found. And trust me, you can still make a lot of money in real estate. It's just maybe not as much as what we once were accustomed to, because places like Toronto and Vancouver, you couldn't really go wrong over the last several years because prices just kept going up and up and up and up and up. Right now we have to be, as you said, maybe a little bit more creative, which is why I said these challenging times like this make good investors, because they actually have to kind of work for it a little bit, right? So
you gotta sometimes just sit down and think, how do I make this work?
So true.
Whereas before it was kind of like, no, it makes sense, let's just do it.
Yep. Prices will go up 20%. And you know what? I hate to say it, it just kind of did. Like, I've never been a big believer in that in regards to prices just continue to go up, but it just continued to do that. And for me, I always struggled with that, right? So
yeah, it was from the time I got my real estate license, which was in 2013, until last year, all I saw was up, up, up. I saw like little blips for a few months when they introduced certain things, like the stress test, for example.
Yeah.
But nothing like what we've seen. I never even thought that we would see this, right?
Yeah.
Considering how upwards of a slope we've been on the last couple of years. So
yeah.
Interesting times. I think you're right. There's always opportunities. And it also wasn't easy to invest when the market was going up 30% a year.
No.
You had so much competition. Everything was being taken, purchased. So yeah, that wasn't easy either.
No, it's kind of funny. I remember all the memes and stuff like that. It's just like, all these little jokes, paying over asking price of like 200, 300, 400, and it didn't make sense. But that's just what people did. Yeah. And then people were saying, man, I wish the market would cool down so I didn't have to do this. Well, your wish came true, guys, so don't miss out. There's opportunities there. So yeah.
Maybe last thing that we'll touch on would be short-term rentals, midterm rentals. Your thoughts on that? Are you doing that with any of your multifamily at all, or are you staying away from it?
Not yet, to be honest with you. So I'm still kind of learning the process, to be honest with you. It's kind of one of those ones that, for me, I'll be honest, I'm kind of a lazy landlord, right? It's just like, I don't really like to do a lot of work. I like to kind of delegate a lot of that stuff. And so it's trying to manage that part of the short-term and midterm rental side of things, is building the right team to facilitate a lot of that, those aspects of it. So are we going to get into it? Yeah, I think we will be. Like I said, I think our test pilot is actually going to be in a different country completely, right? Because the numbers really work very, very well. Sounds kind of bizarre. Would we do it in multifamily? I don't know. I'm not sure. Like I said, I still think there's some places to go with this. So for a lot of people, I know it's an extremely unpopular trend, and rightfully so. You can make some pretty good money, but no different than we've been sharing as well. You got to be really, really careful and pay really close attention to government policy. When you start to look at markets like in Vancouver, specifically on Vancouver Island, we're talking about like Qualicum and Victoria. They're tightening things up. They don't want that to impact the hotel industry too much, right? They got to be really careful with that too. And so with all this demand that's hitting the kind of the marketplace, just be aware. Like I said, just be aware of what's kind of transpiring. I think there is lots of opportunity there. There's going to be lots of competition. So you got to ask yourself, how are you going to stand out versus everybody else? Or are you just everybody else? Because with so much inventory, how do you continue to compete? The second piece, which hasn't come to fruition from my perspective, and again, this is where I struggle with this, is there is, with all these inflationary pressures and challenges that are kind of going on, we're just not seeing it temper travel, which is interesting. I don't know how or why, but I think people just during the COVID, people are just like, I need to get out. Mm-hmm. But is it kind of the high before the low? I don't know, right? And so that's my concern that I have is with people, maybe not having the capital that they had, is that going to also impact that type of market short term? I think long term, there's a lot of longevity to it, but in the short term, I don't know. So, we'll see what happens in the next coming year. Good strategy, can do very, very well. It's definitely not a passive strategy. So you are very, very active. So just be aware of this. So if that's something you're comfortable with and you can do it, then just understand what you're getting yourself into. It's like you're no longer just a landlord, as you're now in the hospitality business. And I think people need to truly understand that. And you live and die by your ratings in a lot of ways. And so you're all looking for good ratings so you can make sure that continues to get filled. But done well, done right. I know a lot of people have done it exceptionally well and are doing fantastic with it, right? So it is a space that I see us getting into. It's kind of like dabbling a little bit, and we'll test the market out and see how we kind of do. But there's just, for me, like I'm a multifamily guy, as you're well aware, and I just know the strategy so well, and I keep it kind of simple, stupid. And so for me, that's always one that it's just resonated well, but it's not to say that I won't be playing in it. I'll probably be dabbling in it. So
the other interesting thing will be how will lenders look at the income from short or medium term rentals? Are they, yes, right? So that's a huge question mark there.
Yeah.
So
because that they don't like the short-term rental space. They don't like those numbers, but in the mid-term rental space, there's banks for everything, to be honest. Mm-hmm. Like you can find financing for short-term rentals. But again, how the banks are going to perceive the mid-term rentals, they see the turnover, they don't like that. And then also the income side of that, will they be doing some different offsets because of that? Possibly. Right. Because they don't like risk. They just don't want to see it. So, and right now they think short-term rentals are risky because, and rightfully so, you just look what happened with COVID. That was a lot of challenges during short-term rentals during that time. So yeah, I think, just be aware of those things. I think from bank financing, competition. And I think last but not least is just government policy. Like, you know what goes on with government controls, it doesn't take much for them to kind of add more pressure or constraints to that industry as well, right? So
100%. We covered a lot of different things. Do you feel like there's any last topic, any last words of wisdom you want to share before we end the podcast?
Yeah, like I said, I think at the end of the day, it's just, for those that are challenged or struggling and going through some of these times, just understand, this is short term, to be really honest. And when I say short term, it's like a year or two. And you know what, 2 years from now, you'll look back at this and kind of say, man, that was a real tough time. And the reason why I say that is because I've been through it before. And you have to kind of go through some of these challenging times. And for those that are having extremely, extremely challenging times, and I get that too, and I'm not discounting any of those things. I think the important part for everybody that I can leave with is you're not alone. There's a lot of people that are going through these challenging times, And my advice is don't be alone. Surround yourself with people, connect with other people that have gone through the trenches before and been on the front line of some of these downturns, and get advice, get support, get help. Ask questions and try to find solutions. And I think that's the thing, is with all these challenges and obstacles that are in front of us, there's always options. There's always a solution. Sometimes the solution isn't the best, but again, don't bury your head in the sand and don't go down with the ship. Just make sure you're trying to keep pushing yourself forward every single day. And like I said, you'll get through this. This is business 101. You own a real estate investing business. And as a business, this is the time to be very, very active with your business. It's not the good old days where I got a rental property, it's just generating all this rental. There are times when you actually have to be busy, and this is one of those times. So
100%. To finish things off, do you just want to tell people about the services you're providing? I know you have some coaching services, that type of thing. Let people know how they can reach out to you as well.
Love it. Thank you. Thank you for the opportunity. So for those that want to check me out or learn a little bit about what we do, we've got a couple things. So first of all, I welcome everybody that is listening. Visit us on our website, thesavvyinvestor.ca, thesavvyinvestor.ca. Join our Facebook community. We've got some amazing investors literally across the country. We're over 5,200 people now across the country of investors. And these investors are all just like us, and they're willing to share, help, support. So if you're needing a network to be involved with, get involved. It's absolutely free. So you guys are more than welcome to kind of join. It's on our Facebook page as well. In addition, we also have our education platform called Elevate Academy, which runs two different things. We've got one of them is called Elevate Masterclass. And we spend a lot of time focusing on teaching fundamentals. There's 3 courses: fundamentals to residential real estate investing for those that are just looking for the foundations, the basics of investing, raising capital through joint venture partnerships. So for those that are wanting to raise money, and last but not least, and George and I's favorite topic, is multifamily investing. So those are our 3 courses. And then we also have something that we just recently launched. Is called Elevate Mastermind. And this is really for individuals that are looking to scale their business. So they're not learning how to invest. They are now looking at managing and running their business and scaling their business. So you can check that out on the website as well, thesavvyinvestor.ca. Set up a discovery call with me, and I'm always happy to answer questions. There's no major sales tactics or pressures. Like I said, just even if you're just wanting to learn more, happy to share some information with everybody. So
cool. Michael, thank you for coming by. I know your stay here is pretty short, but you made the trip out. I appreciate it.
No,
and I'll probably see you at the multifamily conference as well. And
sounds good. Yeah, thanks for your time. I appreciate it, George. That's awesome.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.